Last week, Walmart-backed Phonepe filed for an IPO with SEBI. It wants to raise a total of $1.5 billion against a valuation of $15 billion. And it's taking the confidential route, which means it doesn't have to share its draft prospectus with the public yet. In India, the last fintech giant to be listed was Paytm. This was back in 2021, and most of us remember the scale of its phenomenal flop. At the time, it was India's biggest IPO. Paytm raised roughly $2.4 billion at a valuation north of $20 billion. The hype was real, and the company's hopes were high. Then came the crash. The stock plummeted by nearly 30% on its debut. The reason? Investors weren't exactly convinced by the loss-making company's unclear path to profitability and its over-the-top valuation. But over the last 4 years, the fintech market in India has matured. In fact, even Paytm has been doing much better. Just this month, it rallied at a record high of 30%. Companies like Grow and Pine Labs are lining up for IPOs as well. But here's the thing, a mature market also means a comparatively sober investor appetite. Fintech funding has dipped overall. Traction data shows a 26% drop in the first half of 2025 compared to late last year. Early stage funding and scalable companies with innovation driven models, though, are still attracting interest. So, Phonepe's conservative financials and clear proof of narrowing losses over the years means it might be a more attractive bet for wary investors. You see, fintech's biggest hurdle towards growth, especially in India right now, is regulations. And Phonepe has had zero run-ins with the law so far, which means it has a much better standing than Paytm, which has had its fair share of RBI visits. Phonepe, meanwhile, recently got the green light to act as a payment aggregator, but the anxiety is still very real. For example, about 10% of the company's revenue in FY24 came from digital payment subsidies. These basically compensate for the zero merchant discount rate or MDR on UPI transactions. But the Indian government is slashing the subsidy by nearly 80% this year, and Phonepe's payments revenue is bound to take a short-term hit. The recent real money gaming ban also dealt a significant blow to its volumes. So, regulations and fintech's notoriously thin margins remain Phonepe's biggest challenges, and its parent company, Walmart, is well aware of it. Welcome to Daybreak, a business podcast from the Can. I'm your host, Rachel Verghese, and every day of the week, my co-host Snigdha Sharma and I will bring you one news story that is worth understanding and worth your time. Today is Friday, the 3rd of October. Let me take you back to 2018, when Walmart became a major part of the Phonepe story. This is when it acquired a majority stake in Flipkart for a reported $16 billion. Since Flipkart owned Phonepe at the time, the digital payments company was included in the transaction. And just like that, Walmart had acquired one of the most difficult licenses to obtain in India. As Phonepe grew, Walmart began investing in it as a separate entity. In 2020, it led a funding round of $700 million for Phonepe, officially acquiring it as a whole different company and separating it entirely from Flipkart. And that wasn't even the largest bill that Phonepe racked up for Walmart, which we'll get to in a minute. Now, despite the staggering investment in Phonepe, in its 2024 annual report, Walmart lists its fintech ventures as risky investments. It's mainly due to the regulatory risk involved in operating in different countries. And in India especially, you know how it is. Regulations can change from state to state. Walmart knows that failure to comply with legal and regulatory requirements could cost it, well, basically everything. It could be heavily fined, it could lose licenses to operate, risk a lawsuit and its reputation, and ruin its overall relationships in India altogether. So, through Phonepe and through its position in India, Walmart is putting a lot of its skin in the game. Walmart's involvement in Phonepe and the recognition of this risk makes Phonepe doubly accountable. Like we mentioned earlier, Phonepe has had no issues with RBI so far, even though it controls nearly 50% of the market share. The depth of its integration with UPI also makes it stand out as a more stable and measured company, willing to bet on only the likeliest of outcomes, and with the capital backing to do so. Now, remember the hefty bill Phonepe ran up for Walmart? There's more to it. In 2022, Walmart paid the majority of the $1 billion tax bill that was needed for Phonepe to move its headquarters from Singapore to India. This move was part of the plan to make Phonepe profitable and was also a precursor to the IPO we are seeing today. Shortly after, in 2023, Walmart increased its stake in the company from 76% to almost 90%. And now, 2 years since then, Phonepe is finally ready to list. The plan is to debut next year, which makes the IPO a pretty good potential exit strategy for Walmart. Let me tell you a bit more about this IPO. Money Control reported that Walmart, Tiger Global, and Microsoft are three major shareholders likely to sell shares in this listing. Together, they might dilute around 10% of their stake, but the exact split isn't public yet. As a major owner, how Walmart decides to go about diluting its share could dictate the way retail investors react to this listing. If it sells too much too soon, it could send the wrong signal about Phonepe's value. If it sells too little, investors might worry about foreign dominance at the cap table. However, even as Phonepe nears its IPO, the issue of regulatory hurdles still remain. More on this in the next segment. Now, Phonepe is entering the market with promising optics. Its FY25 financials show operating revenue up by nearly 40% year-on-year to about 7,000 crore rupees. Net losses have narrowed also to around 1,700 crore rupees from almost 2,000 crore rupees in FY24. That means it can credibly tell investors we're still growing without bleeding too much cash. And that, for public investors who have possibly grown wary of endless losses, is obviously a positive signal. Reuters reports that the platform boasts of over 600 million registered users, supports 40 million merchants, and handles more than 310 million online transactions every single day. All of this is incredibly impressive. Another great sign is that they've backed that crucial regulatory green light I mentioned earlier. Phonepe has received final authorization from RBI to function as an online payment aggregator. Now, if you don't know what that means, here's a breakdown. Until recently, Phonepe could only act as a middleman. The money from a customer's payment flowed through its partner banks. But with RBI's payment aggregator license, Phonepe can now directly onboard merchants and settle payments itself, giving it more control, better margins, and a stronger business model ahead of its IPO. To put that in perspective, in 2024, Phonepe actually handled a much larger volume of UPI transactions, 15% more GMV or gross merchandise value in fact, compared to Paytm. But Paytm still managed to take home about 60% of the government's UPI incentive payouts. Why? Well, that's because Paytm is more focused on merchant payments rather than just consumer-to-consumer transfers. Incentives mostly reward transactions that drive commerce, so merchant payments bring in more money per transaction than peer-to-peer transfers. So its new RBI win means Phonepe can get more of this merchant share. And the timing couldn't be better. Back in November 2020, the NPCI, or the National Payments Corporation of India, proposed a cap to avoid monopolization. No digital payments firm could process more than 30% of all UPI transactions. That rule is finally set to take effect next year. Today, Phonepe handles almost 50% of all UPI payments. So even if it's forced to bring that share down, focusing on signing up merchants now means that it can lock in more high-value clients for the future. Still, the pressure is on. Before the proposal comes into effect in 2026, Phonepe will have to diversify its revenue streams. It's already begun this procedure by branching out into stockbroking, insurance, and an app store, all with varying levels of success. Whether it can build steadily on this plan without taking major hits from regulations remains to be seen. But as of now, there seems to be trust in Phonepe's capability to have a successful IPO, because it does have a lot going for it: a sizable market share, regulatory wins, and a parent with deep pockets.
Daybreak is produced from the newsroom of The Ken, India's first subscriber-focused business news platform. What you're listening to is just a small sample of our subscriber-only offerings. A full subscription offers daily long-form feature stories, newsletters, and a whole bunch of premium podcasts. To subscribe, head to theken.com and click on the red subscribe button on the top of the Ken website. Today's episode was hosted and produced by my colleague Rachel Varghese and edited by Rajiv Sien.